All right. Hopefully everybody had a nice weekend. Somebody had a nice weekend. It is going to be an interesting week. This will be the make or break. With the talk about, the Christmas rally and blah, blah, blah. Earlier in the year, around early to mid-October, we started talking about the possibility of two different situations that could happen through the end of the year. And they were very clear examples. There was the 2018 example where we had dumped down all the way into Christmas at those lows and then rallied right back out again. We spent most of that from October to December in this volatility box, and then we had dumped out, made it down to those lows and rallied back out of it. So there was the possibility of that fourth quarter. And we didn't know at the time, back in October, if it was going to be that or if it was going to be more like this, where, we were in a range, come out of the backside of October, and we get this kind of grinding action into the end of the year. You can see even, past Thanksgiving before the end of the year, still had a pretty good sized pullback, still a lot of sideways action, and then just a little more explosive push to get out of that mess and into the end of the year. And they always say history doesn't repeat itself, it just rhymes really well. We were looking for one of these two examples. That would be the example, right? Now, we pretty much knew it wasn't going to be the dump and sell. Once it had stabilized here in that inverted head and shoulders and came back out of it. Inverse head and shoulders. The target is 4,800 in the SPX. Now, Goldman Sachs had been giving targets of 5,000 all year. At some point, they even had 5,200. Right? So back in January, way back here, that's the projection that Goldman Sachs had given when we were around 37, 38, and 39. And here we are at 48, 47. When we were back here, everybody said, oh, yeah, right. No way. We're not going to 47. Well, we're at 47. And the target is that $200 line, and that's 4,800. It's just another 88 points. We got 3 weeks to do it. And looking at the economic events through the overnight hours with the stimulus talk coming out of China, them releasing the capital last week that we had talked about, this 5,000 mark is not off the table. For the week, you can see that we are in a much calmer expectation. This was the expected move last week. Look at the size of that box and just bring it over to this week. You can see how much they've reduced the expectation of movement. Don't let that fool you. They get it wrong all the time. All right, so we're topped out. These levels that we're looking at were drawn on the daily chart. Start the morning with Market Watch, as we usually do. Come into the calendar. You can see we have additional auctions today at 11:30. That's it. Now, it is a Fed week, so there's usually a talk where people expect a real muted market, a lack of participation, a lower volume, things just kind of staying stalled. And I'm really talking about SPY, QQQ, setting a range and staying in it until the event. And that would be normal. I don't necessarily think that's what we're going to get, right? But be ready for that. On a Fed week, your best bet most of the time is just to get an iron condor, and because we're not going to do anything. Get one for Wednesday, and then close it out Wednesday. That would be the normal situation. But guys, be ready for hell and brimstone, fire and chaos, and just a monster rip between now and then in either direction. I'm not even going to try to pretend that I know where this thing is going. None of us do. All right. We got a pretty good idea. When we talk about what's more likely, that we make it through this level and continue to the upside, or that we rejected this level and go down. If we're able to break through this, then it's very likely we're going to hold above it, the old resistance being the new support. But notice the size of the expected move this week in the futures. It's very small compared to last week. So the expectation is that we're going to have a lot of range-bound market, that we're not really going to move around too much, and that we're very likely to stay in this range until after the announcement Wednesday. That's what we would generally do in a Fed week. Should we break out of the top of this, Fibonacci will be in play. You could try to use fibs from the higher level, but you're better off focusing on the fibs within our own time frame. And the reason that I say that is because of the way that I use fibs. When we have price finally break a range, I needed to first set a period of and pull back, right? Opposite candle color before I can apply the Fibonacci. Well, on a daily time frame, we could be waiting 3 days to get a red day to be able to snap that fib. That we wouldn't be doing it today. So, with that in mind, use fibs on the intraday for your upside targets. And when I talk about how a market moves from pivot to pivot 90% of the time, if we break out of the top of this range, that would be the other 10% of the time when we're not moving to a new pivot, right? When we're going into all-time highs. To say it another way, when the S&P, SPY breaks out this week into all-time highs, the people who are buying it are spending more money on it than has ever been spent in the history of the marketplace. Who wants to be that sucker? Anybody want to stand in line and spend more money for the S&P than has ever been spent in the entire history of the marketplace? You want to be the person that buys it at that high? We're up 0.25%. In a good, clean, bullish, we would have at least a 1% move. That put us at 47.50. If we have an amazing day, that could put us to 4,800. I don't think we're going to have an amazing day because we've already had 12 hours go by, but we could hit a 1% move. So the upside target for today would be 47.50. That would not be out of line. It would take a pretty aggressive move to see it, right? So tick, trend, AD would all be lit up. Market breadth would be lit up. The sectors would be green. It would not sneak past you. It would not be a slow grind because we don't have the time left in the day for a slow grind up to 47.50. It would be an aggressive push. Something about like this. A downside target would first have us deal with Friday's levels. Come on. What is with Thinkorswim today? Friday's high. Friday's Globex high. Friday's open. Keep in mind, the market could fade down to 46.90 and it would not be considered bearish at all. $46.60 is the line in the sand. No reason to expect that we would break through that level without something very serious kicking off in the marketplace. And again, that would not be subtle. There would be news everybody would be talking about, right? Like say China invades Taiwan or something. Who knows? A drastic world event could put us down to that level. Otherwise, it's very unlikely that we're going to go to that level. All right, who's the fool drawing on there? Angel, are you playing with your drawing tools? I'm going to take away your drawing privileges. So that pretty much deals with the ES. There you go. I got it taken care of. That way you don't accidentally do that. I know on the cell phones it's easy to do. No, I understand. No worries. Trust me, I have done it too. All right, so that's the ES. At least you didn't butt dial me. For the NASDAQ, same situation. We've just got this, it's just this massive reversal topping pattern situation, right? We've got this just cluster of crap sitting up here. We're not at all-time highs yet. That would be the target of concern to the upside. If we were to finally break out of this range here at 455, then the overhead is going to be 16,600. It's worth coming out and looking at these higher time frames. It's worth coming out and putting on, a few moving averages. I know as day traders, we get stuck on this idea that we need to be in the smaller time frames, but make it a habit of coming out, looking at these higher time frames, because if we hit a daily 20, a daily 50, a daily 200, the market will react to it. You don't want to be trying to get into a market literally right before we hit a major moving average and take a rejection. You take a loss that you never should have had to take if you had only known that there was a major moving average right over your head. Right now, the 5 and the 10 are underneath the NASDAQ. So from that point of view, we're not going to hit the major moving averages to the upside, but if we begin to fade off, we could hit them to the downside. There's the daily 10. There's the daily 5. And you can see that the daily 5 is right underneath us. So if we were to break this range to the downside, we're going to need to deal with that 5-period moving average. We would like to say that at least the first touch is going to be a bounce. So if you're looking for a trade opportunity, even just that bounce would be a nice play. If it fails as support and we happen to break through it, then we will deal with yesterday's price action, which includes yesterday's open. We would already have dealt with yesterday's highest. If we get through that 5, it means we already made it through that level, but we'll go ahead and mark it. So that'd be yesterday's intraday high, the 5-period daily moving average, and then yesterday's open. That's a significant move at that point. There could be one more play, and that would tie us in basically 235. We start to get beyond that, and it'll be because of some news. It won't be subtle or sneaky. It'll be all up in your face. So you will know it at that point. That is a very ugly inverted head and shoulders, by the way. That 200% is the measurement. There are a lot of schools of thought that say when you measure a head and shoulders, that your target should be half, not all of the distance. I don't know what to think about that. Maybe take a significant portion off at half and try to set a runner to the 200%. On Friday, for an example, in the SPX, we had the 200 as our target. It stalled around the 150. It kind of screwed around into the later part of the afternoon, and then it did get to the 200%, right? It did make the rest of the move. It just took a long while to get there. So I don't know. That's what's out there. I'd say try to get the bulk of your trade done by around half, and then maybe set the other half for the target, the 200 target. That would put us above all of this junk here, but that would not put us up into that all-time high area. We're not going to get into that. Not today, not without something spectacular happening. All right. In the overnight hours, there was some talk about China and fiscal policy. There's a lot of talk about releasing capital for funds for banks and new guidelines. They're making some assurances about stabilizing the market. Everybody thought that sounded really good. They all have that warm, fuzzy feeling. The market buoyed. Just, be aware that at the same time as Asia was closing and Europe was coming online, Europe is still poo-pooing over their, production numbers and inflation, coronavirus redo, whatever they call this new one, the new variant, Omicron variant, whatever. So it kind of lost a little bit of its mojo, right? And kind of faded back off. But it's been pretty stable even in the fade back off. I say that, and yet look at the Dow, right? The Dow just fell off the top bunk. But, hey, it is basically flat. So, we're getting a little bit of a turnaround here. Keep your eye on the VIX. We're back below 20. Remember, that was the target for Friday, is that we wanted to be back below 20. When I was doing the stream Friday morning, I said, I want to see this thing get below Friday. I want to see it get below 20. Yay for us, right? We made it. We made it. And we just want to see that hold below that level. The dollar started to get a little wild last night, and now it's backing off. And the bonds are bidding back up. Got a little bit of a ceiling. We don't want to see those bonds crest above that 162. It's a little bit of a line in the sand. It's a critical level. So let's just, keep our eye on it. Make sure that it doesn't do another one of these hard push rallies like we had Friday. Watch the dollar for a fade. These two are going to be the best tools that you can put on your chart. All right, Trend Spider. Looking at the sectors, we're kind of a little bit mixed, right? You take the top one off, so that leaves tech, biotechnology, tech again, cloud, which is tech again, and then SPY, healthcare, building materials. You notice there's a lot of tech, energy, real estate, utilities, industrials, all the boring rebuild stuff down here. Speaking of rebuild, there is supposed to be a meeting today with the president and one of the holdout senators for the Build Back Better plan, blah, blah, blah. If some news comes out on that front and they get that stimulus, watch the EV market, right? I know we're kind of like taking a tangent there, but watch the EV market, because there's somewhere in that plan something about a $12,000 to $500 tax savings, whatever you want to call it, so that if you buy an EV car, you get a nice little kickback, or you get some assistance with that. Well, those EV cars need a place to charge, and there's somewhere in there about more infrastructure for building places to charge those. So if the news comes out that there's no more holdouts and that the plan could move forward and that they're going to line up at the trough for their government monies, the EV sector is very likely to get a nice little boost again. And I would not discount Ford and GM in that mix, right? And I was pricing Ford over the weekend. Right now you could just do some put selling in Ford and make a pretty good amount of premium. And you're talking about a risk of ending up owning Ford at like $4 or $5 a share, right? So sell a put, $400 buying power, just let it ride. Who cares? Kick the can down the road. Airlines are down. Watch for travel to turn around if we get some positive news through the day on this Omicron variant. Right now, the travel is down because Europe is pretty negative this morning in their language. The things that they're talking about in the news this morning over in Europe is all Omicron based and how it's restrictive and blah blah. So yes, the airlines are down at the moment. I'd be watching those today for a reversal if any good news comes out about the the lack of severity, or any kind of language like that. Chips are up. My crypto list is actually more about blockchain than crypto, and you can see it's pretty mixed, right? It's not that bad. A couple of the bigger names are down: Coin, Mara, BT. But if you look on the other side of it, some of those chip names like Nvidia are up, AMD, PayPal, Square. They're not up a lot, right? Like PayPal and Square, not even up a 1/4%, but that's the direction, right? You want to be looking for those opportunities, especially catching a play off of the lows. Because as I've said before, I'd rather catch them before they move, 2%. Same thing with the EV names. We do have some negatives and a lot that are kind of flat. Be watching these today when when the news of the president's meeting comes out. When it comes to the Fed week, by the way, guys, it's not just our Fed week. This is like global Fed week. There's going to be nations around the world announcing new federal policy, right? News all around the world, multiple nations. So almost every day this week, there's policy coming out, which means keep your eye on the bonds, keep your eye on finance. These are going to be the plays. Finance has been very tightly correlated to energy. And for the most part, the marijuana stocks are up this morning, for the most part. So, we got some direction. Be very careful today at 11:30. Those auctions can kick the market into gear and kill a really nice trend day or fire up a really nice trend day if we haven't been having one. There's nothing wrong, by the way, with just completely walking away on a Fed week. I don't have any plans to do that, but as a day trader, there's nothing wrong with recognizing an increased level of risk and just stepping back and saying, "Oh, I'm going to go do something else this week." Right? I know plenty of people that don't trade Fed week until at least Wednesday after the announcement. So what I got for you guys. Be careful, be safe. I will see you all in the large caps room at 9:15.